Amazon just announced a 20-to-1 stock split and a $10 billion share buyback, just like I knew it would. In my previous video about Google's 20-to-1 stock split, I mentioned Amazon would do the same. I didn't think they'd do it so soon, and I didn't think they'd do a 20-to-1 as well. When the new CEO of Amazon started, he has to make a splash. A new CEO has to make a change. They have to make a big difference to prove that they're doing something for the shareholders. A stock split is one, the share buyback is another. At the end of the video, I'm going to show you what I'm going to be doing with Amazon, aka spending $60,000 buying 20 shares. If we go right into, I'm just going to go over TradingView and what happened with Apple, Nvidia, and Tesla pre and post stock split and why I'm taking advantage of this. So we go to TradingView. There's psychology, there's an investor psychology when there's a stock split, it becomes more affordable in their mind. And I'll just explain it. So the S is when the stock split, the announcement and leading up to Apple's split, everyone thinks they're going to be making more money. You don't make more money, you don't get extra shares. So if someone says, hey, I have one share of Amazon, I'm going to get 19 additional shares. That's not true. You don't get 19 additional shares. Your one share gets split into 20. So it's the same pie split into more sections, split into more slices. I think that's the word. So, and I'll talk about what a share buyback does as well, and why I'm going to take advantage of it. So it's just investor psychology. Apple was $600. A lot of people can't afford $600, but when they heard a 4-to-1 stock split, they're like, hey, I can afford, what is it? Like, this is 67. Like, I can afford this. So up to the stock split, investors bid it up. And then right after, I think this is like hedge fund money. The hedge funds, I guess, sold the stock because they knew after the stock split, it's like, buy the rumor, sell the news. A stock split technically doesn't change anything about the company. The market value stays the same. Everything stays the same, just the number of shares and the share price. But it does something in investor psychology. More retail buyers like you and I can afford it, can buy it. At $3,000 a share, I can't own any Amazon shares because I need to own at least 100 to trade options, sorry. But at $150, I can buy 100. I can do what I want to a certain extent. So leading up to the stock split where the S is, there should be a run up and then it'll sell. But then this is like short term, but long term, a stock split doesn't mean anything for the company. But if you're bullish in the long term on the company, it should go up. Let's look at Tesla. So Tesla, again, the same thing up before the stock split. Let's say it was at 170. It got run up all the way to 500 and then dropped right after. Maybe I'll zoom in for everyone. It dropped right after. So I'm going to try to take advantage of the same thing. Let's look at Nvidia. Same thing happened. Where is it? Okay, let me reset the chart. So look at Nvidia, the same thing. It was running up from like 137. Okay, so it dropped a little before the split, but still a good 25% run up. Dropped a little and it continues to go up. If you're bullish on the company, again, this increase over the long term isn't from the stock split. It's from the company doing well and it's from buyers buying in. But I am going to do the same. So Google announced a stock split and I filmed a video 6 weeks ago showing you that I bought 10 shares, which is $30,000. And then right after, everything dropped and everyone's saying, you should have waited, stocks are dropping. If a stock drops, it's fine. Things go up, things go down. These global economic issues, they will affect short-term price changes. But if you're bullish on the company long-term, you shouldn't worry about the stock going down. Everyone was wondering if I sold my Google stock. I told you I'm not going to sell my Google stock. So here's the thing. As soon as I buy stock, it goes down. So I'm going to buy Amazon right now. I'm going to buy 20 shares, $60,000. Amazon will drop just knowing my luck. My luck is perfect. But I'm going to hold on to it because my 20 shares will get split and I will have 400 shares. 400 shares means I can sell 4 covered calls. Another question people are asking, if you have 0.5 of a share, you have a fractional share of Amazon, you still take advantage of the split. You will get times 20, you'll get 10 shares. If you have 0.05 of Amazon, you'll participate in the split. You will have 1 full share. So if you have 0.05, you'll have 1 full Amazon share. Congrats, you're part of you're contributing to Jeff Bezos's purchase of a new yacht. Just kidding. what else do I want to talk about? I want to break down the share buyback. I would rather have a dividend than a share buyback, but let me break it down. So what a share buyback is, they have, is this $1 million? I should have done this before, right? I'm the worst YouTuber. So $1 million, look at that. And then let's say it's worth $250 million. So this is number of shares. This is market value. And then they buy back 100,000 shares. Market value. So they buy back 100,000 shares. And then when a company buys back shares, it's not like they're still the same amount of shares. When a company buys back the shares, they get canceled. So the company's buying back the shares and canceling them. So if you go the share price $250. But when you buy back these shares, the company's market value doesn't change. It doesn't do anything to the market value. It just reduces the number of shares. When you buy back a share, when a company buys back a share, they get canceled. But look at the stock price. I should have done this differently. I'm the worst. Stock price. When they buy back they bought back 10% of the shares, the stock price goes up. Let's say they do this again. They buy back 200,000 shares. Stock price goes up. Market value stays the same. This means nothing. So when a company has excess cash, I don't think it's adding value. Adding value in my mind would be reinvesting in the business or paying a dividend. Dividend is permanent. This is temporary. They're buying back shares. They're not increasing the market value of the company. Company's worth the same, but the pie is getting split into fewer slices. So the stock price indirectly goes up because of this. So I would have made money in the stocks I purchased, but it's not real value. It's not the company making more. It's just less fingers in the soup, less chefs in the kitchen. That is what a share buyback is. But I am still going to take advantage. I am excited. So if we load up Questrade, you can go to stocks, you can go to options, type in Amazon, click buy. So Amazon is up 4% after market, pre-market. Right now it's 8 a.m. The market isn't open. I can't afford 100 shares because that's way too much, but I can afford 20. And here's what I'm going to do. I'm going to buy at market price. I'm going to have this loaded up. You take a look. This is $58,000. I am buying 20 Amazon shares. These shares will go from 20 to 400, and I can sell covered calls. Covered calls is 100 shares, and I can sell 4 of them. So even though the price might go down, like in Google, I am indirectly losing money. Right now, I'm losing 5%, but I would have 200 shares because I got 10 shares pre-split, and I can sell covered calls. I will recover my cost basis. I will be holding this long term. So if you watch this video and Amazon goes down the next day because my luck is perfect, I am holding. It's not a big deal. This is like 8% of my portfolio, which is a lot in Amazon, but I am bullish on it in the long term. I think they'll continue to grow. If not, even if they hover, my covered calls, my monthly premium will add to my portfolio value. So let's go click send order. The market is closed right now, but this will be filled when the market opens. I will have 20 shares. The thing is, when Amazon splits, I don't have the exact date. The shareholders have to bid on it, have to vote on it March 25th. I do think they will appreciate it because the share buyback will indirectly increase their value, and the stock split, investor psychology, they'll think they can buy more, so they want to invest more. I do think it'll go up. If you think it's a good time, it's also a good time for them to do this. If you think about it, year to date, the stock is down 18%. So when they do a $10 billion buyback, they can buy back more shares and cancel more shares. If we look at the last 6 months, it is down 24% from the all-time high. No, that's not the all-time high. I think the all-time high was, okay. So let's say a year ago, it was down 25% from the all-time high. So it's a good time to buy back. You don't want to buy back the shares at the peak because you can't make as big of a difference, but down 25% in just like 6 months, I think it's a good time. So if you're interested, you can buy into Amazon when the stock splits. It doesn't matter the date. No matter what, you will get, the date is just a formality. The stock will get split. You will take advantage. You won't miss the boat. No matter what, the stock will be splitting if you own it the day before or the day after. They'll usually split on a Friday. So when you wake up Monday, if you had one share, it'll turn into 20. So thanks for watching. Let me know if you have any questions. If you'd like, join the Discord so we can chat about Canadian finance tax options. We have 17 members so far, looking to grow it. Let me know if you have any questions and tune into the next one.